Welcome to the Kapital News. I'm your host, Alex Karitis. Today is February 24th, 2020. Thank you so much for joining me. Hope you all enjoyed your weekend. Title of today's podcast is Manic Monday, and I'm sure you all know what I am talking about if you paid any attention to global markets. This was most definitely a very, very manic Monday. The Dow Jones Industrial Average losing 1,032 points for the day. 1,032 points. We're going to talk about the other indexes as well, but this is quite remarkable. This, I believe, is the only third time in history where the Dow lost 1,000 points or more. Now, on a percentage basis, we're down about 3.5%, which in and of itself is a big move for one day. But we said last week, because our Friday podcast was entitled Reality Sinking In, and of course that was a question mark, and we said time will tell, as it always does, but we really have to see what the follow-through is come this week. Well, so far, reality seems to be sinking in. Now, I still don't believe that reality is sinking in when it comes to the underlying fundamental economic data that we talk about here all the time. So we're only getting part of the picture. We're only getting some investors finally starting to wake up to understand that the coronavirus is more severe than what they had initially thought that it was. Now, we were never thrown off by this. We said this was something to pay attention to. I don't take my scientific research from the crackheads on Wall Street and from the idiots manning the printing presses around central banks the world over. Because we have access to this thing, ladies and gentlemen, called the internet. And you can go on it, and you can ask questions, and you can find information from Johns Hopkins University, from Harvard University, and you can find articles and interviews from the world's best epidemiologists, virologists, microbiologists, people who understand this stuff, not people on Wall Street trying to get rich at anybody's expense. And that's why we said, pay attention to this, because we knew perfectly well from the onset that any quote-unquote official number that we were going to receive from China and the Chinese Communist Party was going to be false, erroneous, a flat-out lie. So here we are. We have about 80,000 confirmed global confirmed cases of the coronavirus. The World Health Organization still does not want to call this a pandemic, even though by definition it is. An epidemic is localized to one country. Once it starts crossing borders, it becomes a global pandemic. Well, it is now in 36 countries, and I'm sure it's much larger than that. Why? Because there are a lot of health systems that don't have the requisite resources in place to test people. And a lot of that you're going to see in Africa and probably even in some parts of South America. Because if you look at the maps, you don't really have that many confirmed cases, if any, in a lot of African or South American nations. But it would make sense that one of the reasons why is because they don't have the adequate healthcare systems in place to test people appropriately. We don't even know if there's enough testing kits to test people in China to the degree in which they need to be tested, in South Korea, where numbers are growing exponentially. They're basically doubling almost on a daily basis. Japan, where the numbers are growing. We have a bigger, I think, Middle Eastern outbreak in the midst. I hope I'm wrong, by the way. You all understand this. I'm not wishing for this, but I want people to be prepared and to understand that this is not minor. People that saying, well, this is just a basic flu or this is just the cold. Countries don't quarantine themselves and shut down half of their countries, if not more than that, because of the basic flu or the common cold. Use your head. It doesn't take that much thinking to realize this. And then again, once you understand the Chinese Communist Party, they can't be trusted. So how much worse are the actual numbers? 5, 10 times worse? Because it's not 2 or 3. It's got to be at least 5 or 10 times worse than what they're claiming. In a country of 1.3, 1.4 billion people, with a city that is supposedly the outbreak, the epicenter of this, being about 11 million people, highly dense populations, and you're saying there's only, some 70,000 confirmed cases? No, I'm not believing that. Not for a second. You have a continuation of other countries pushing out the delay, the return times, to when they're going to start opening up manufacturing facilities, when they're going to start opening up commerce centers. Hong Kong has just delayed the opening of their school system until Easter. Until Easter. That is another 6 weeks away. That puts us well into the first month of the second quarter of 2020. And the reason why, folks, these numbers keep getting pushed out further and further is because as time progresses, we, of course, are learning more and more about the coronavirus or COVID-19, right? Well, one of the things that we have come to learn is that the incubation period seems to be getting longer. Before people said, well, you know what, it might be a couple weeks. Now it looks like it could be up to a month. An entire month. Where people are infected, but they might not know it. And not only are they infected and not know it, but they can pass the disease, the virus, on to somebody else. So there are a ton of unknowns that remain. Patient 0, the original person who contracted this virus, is still unknown. At least that's what we're being told. It's still an unknown. We don't know who or where this person is. And we're starting to see this virus grow and spread around the world. We have Italy basically shutting down the northern part of Italy because of a growing concern and growing cases in Italy. We have Iran with growing cases. There are now cases confirmed in Iraq, in Kuwait, in Afghanistan. So this is turning into a Western Asian, Middle Eastern problem as well. And a lot of these countries do not have an adequate healthcare system in place. So the numbers are going to be underreported, pretty much by definition, because of the poor healthcare systems that exist in so many places around the globe. Now, last week, again, of course, we were talking about is reality sinking in. This comes to, well, this thing might actually be a little bit more serious. Oh, no, duh. Wow. What a surprise. What a shocker. The world's second largest economy in China shuts down, pretty much remains shut down in certain parts of the country. Nothing to see here. Let's just keep rallying on because somebody's going to come to the rescue with fiscal stimulus. Somebody's going to come to the rescue with printing more money. And of course, that's the cure-all, right? If you're sick, you don't go to the doctor, you go to a central banker. And they give you some liquidity and you're all better. It'd be nice if it worked that way, but unfortunately it doesn't. So reality has to start sinking in. I mean, this is what happens when you're on crack. You don't understand reality. Okay? So to some degree it makes sense why the markets kept going higher and higher, because these people are blinded by stupidity. They're blinded by the drugs that they're addicted to. And right now it's easy money and easy credit, which has been the case for the past decade. So this is a Pavlovian response. You ring that bell, the dog starts salivating. If there's a sell-off, markets continue to rally because they're going to think that the Pavlovian response is to buy the dips because that's what they've been conditioned to do for the past decade because the Federal Reserve won't allow it to go down so much as it's within their power. Now you couple that with a president and an administration who comes out to cheerlead and Trump and just tout the stock market as if it's the best thing ever, you got a double whammy and you got a big problem. And we're going to talk about that today too, because despite the fact that Donald Trump is traveling in India, of course, he knows what was taking place in the stock market. So we're going to talk about some of his remarks and some other remarks from Larry Kudlow, his economic advisor within the White House. So this coronavirus, COVID-19, as we have been saying here for weeks, was going to be something that was likely going to turn into something much more serious than what Wall Street and a lot of governments wanted us to believe, what the World Health Organization wanted us to believe, what the CDC wanted us to believe, etc., etc. Because recall, don't have a short memory span here. It was only a few weeks ago when the World Health Organization came out on a Tuesday and said, no, there's nothing to see here. This is not going to be any type of global occurrence or anything like that. And then 2 days later, on Thursday, they come out and said, no, my bad. Yeah, this thing is probably going to turn into something global. And it has. And again, last week, the World Health Organization comes out and tells us that the window to get this COVID-19 contained is narrowing. Well, I think we're pretty much past that point. Now, that might not be the case in some more developed countries. Maybe South Korea can get a better handle on this. Maybe Japan can get a better handle on this. Maybe Singapore. But what about Iran? What about Kuwait? What about Afghanistan? What about Iraq? What happens if this thing gets into Turkey or Syria with all of these people, all of these refugees? What healthcare system do they have? What type of testing is going to take place to confirm if they have it? You understand how quickly this can get out of control, and I hope it doesn't. But this is what happens when you have our government officials, whether it's in the United States of America or the Chinese Communist Party or anywhere else for that matter, when they don't come out and tell us the truth. Now, they might have a vested interest in keeping people calm. I understand that. Because a lot of people overreact, don't want to take it further than what it might actually be. I get that. But at the same time, there does have to be some leadership. There does have to be an understanding as to what it could turn into and how people can prepare themselves just little by little. It doesn't have to be go crazy and everybody goes to Walmart or Target or Costco and buys everything off the shelf. Just have an extra pack of batteries and some flashlights. Have some extra food. It doesn't have to be forever in a day. But be a little bit more prepared. Have a little bit more understanding of what this thing could be. Understand, make sure you wash your hands. Don't touch your face, that kind of stuff. These are basic elements. Those are little signs of leadership. That's all we're asking for here, but we don't even get much of that. Not much from our politicians anyway. You might get that from a doctor or some sort of health official on a TV interview, but that's about it. That's about it. Because the other thing you have to understand, too, within this Trump administration, is there has been a lot of funds that have been cut from the NIH and the CDC. And surprise, surprise, one of those areas has to deal with a pandemic control team. Can't make this stuff up. Now there's discussions that we're going to have to use emergency funding to take care of this pandemic if need be. Emergency funding. Before the funding was there, for the NIH and the CDC for a pandemic response team, it's been cut. Now we got to go to emergency funding. And of course, we don't have the money. So, Mr. Powell, Federal Reserve, get those printing presses ready. Get them ready because we're going to need that money. Can't make this stuff up. We have the S&P 500 giving back 112 points, also down 3.35% for the day. The NASDAQ 100 gave back 355 points, down 3.8%. And the Russell 2000 gave back 3% on the day as well. At the time of this podcast, since we do them in the evening, Japan markets were actually closed on Monday for holiday, but they are now open today. The Nikkei is down 760 points, representing a loss of 3.25%. The UK markets gave back 250 points, also down 3.13%. Germany gave back 544 points, a loss of 4%. The French gave back 235, down 4% as well. The Italian markets gave back over 1,000 points, a whopping 5 percentage points on the day, because they might be, ground zero when it comes to a European outbreak, and hopefully those officials in Italy can get this contained. Spanish markets also gave back 400 points, representing a loss of 4%. Commodities, at the time of this podcast, they're rebounding, but WTI gave back about 3% earlier in the trading session, now trading at $51.73 a barrel. Same thing with Brent, trading at $56.60 a barrel. Natural gas, despite its recent rally, getting ever so closer to that $2 threshold once again, retreated. It is now trading at $1.84 per million British thermal units. Gold and silver still seen as a safe haven asset, rallied on the day's session, but at the time of this podcast is retreating ever so slightly. We have gold trading at $1,648 an ounce. Silver is at $18.52 per ounce. Now, on a day like this, I would have expected both gold and silver to perform a little bit better than what they did. This could take us right back to the market manipulation that unfortunately exists in the precious metal space, which has existed for quite a while. We've alluded to here in the past some stories, some news that has been coming out in regards to this market manipulation, pretty much front and center with JP Morgan trading desks. What do you think is going to happen to these people? That's right, nothing. You might get a couple headlines out of CNBC, Wall Street Journal, etc., but what's actually going to happen to these traders and these people who actually manipulated these markets? Absolutely nothing, just like before. If they're not going to take care of people who manipulated the housing market and did what they did a decade ago, what do you think they're going to do when it comes to the precious metal space? Nothing. Bonds is a big one, and I do want to get into some other markets. So bear with me for 1 second because I do want to look up real quickly here what's taking place in Asia right now too, because of course most of those markets should be open. So I just want to do a quick glance here. Again, the Japanese market's down over 3%. We have the Chinese market down 1%. Let's see, the South Korean market was down significantly on the day, but is rebounding. So this could be what they call a dead cat bounce. Just some, people trying to pick a bottom, get back in there. So the South Korean market is up 22 points, representing a gain of slightly over 1%. Let's see what's going on there in Hong Kong. Relatively flat on the day, but also took a sizable hit. So no surprise when reality starts to sink in and people start to understand, not only can this truly be a pandemic, which it's turning out to be by definition, but that it's also going to affect things economically for a longer period than what they, I guess, presumed initially. That this is not just a supply shock because of the supply chain disruptions with the lack of manufacturing taking place in China, but it's also a demand shock. People aren't traveling. Think of all of the tourist dollars that are lost because China, because their middle class is growing, one of the things that people do when they get more money is they start to travel. This is highly predictable, and the Chinese are some of the biggest travelers out there. Well, they're not traveling anymore. Countries aren't even letting them travel into their country. There are lockdowns. Airliners around the world are not flying into or out of China. It's shut down. There is no V-shaped recovery, ladies and gentlemen, when it comes to those tourist dollars making their way back into those economies. And this has been a trend that has been growing with Chinese tourists for quite a while. So you can imagine that there are a lot of businesses and economists and even some government officials, for that matter, taking into consideration those dollars coming in like clockwork to a certain degree, at least on some sort of average. Well, there's not going to be any V-shaped recovery in that, especially if those Chinese tourists or would-be tourists aren't working. If they're shut down in quarantine, they're not making any money. If they're not making any money, they can't travel. Furthermore, even if they said, well, we still saved up, we still had the money to do it, we're still going to go do it, you're just getting back what you already had. That's not a V-shaped recovery. You understand what I'm saying? It's not as if they're saying, well, we were going to go to France, honey, but then we got quarantined. We were going to go for a week. But now since we've been quarantined, we haven't been working, we have no money, now we're going to go to France for 2 weeks. That's not how it works. That would maybe say it's going to be some sort of V-shaped recovery because there's going to be an extra amount of spending. That is not going to take place because these people have not been working. The first thing these people are going to want is probably going to be the essentials. I don't think it's going to be the iPhone 11 or the Samsung flip phone or whatever it is their new fad is. I don't think it's going to be an Adidas hoodie or Puma sneakers. I think it's going to be food and clothing and some of the essentials. And the other thing that is becoming concerning with the coronavirus, COVID-19, is there are cases reported in China now where people who had it, who were considered cured or recovered, I should say, now have it once again. So there's a lot of unknown questions surrounding that as well. A lot of unknown answers. Did they really expel it from their bodies, or is this something that, can be tested because it's so small, but then it comes right back? Did they contract it again from somebody else, from a surface? Did they touch something? Or did it never really leave? These are serious questions, because if this is something that can come back so easily, especially in somebody who recovered, which you would presume would be a healthier individual as opposed to somebody who might be older or somebody who has some other underlying health problems, that could be problematic. Because again, folks, it's not just the mortality rate that we have to pay attention to, it's the severity of it, the severe cases that can overwhelm healthcare systems. And if everything was A-okay in China, then ask yourself this: why are they building more makeshift hospitals? If everything was under control, why are they building, I think it's about up to 19 makeshift hospitals? Now, these are not hospitals in the sense where you're going to think there's a whole bunch of equipment and all that stuff. It's basically a building with beds in it. because that's the best they can do and they can get them up quickly. If everything was fine, why are they building more of them? It's a serious question to ask. And if everything was fine, why do other countries around the world continue to push out further their bans on traveling to China or allowing other people to come into their country or delaying when businesses start? And I think one of the key events to watch is what Japan says when it comes to the Olympics. Because if you have a global pandemic, how can you have people from virtually every country in the world traveling to Japan? See the problem with this? When it's not contained, when you don't fully understand. Even if Japan was to say, well, here in Japan, we have this thing taken care of. And we're fine on our end. Yeah, we had a bad spell of it through, January, February, March, maybe even April. But come the summer games, in what month? August? Everything's A-okay in Japan. Well, what happens if that's not the case in the Middle East? Or Africa? Or South America? Are they going to let these people participate in the Olympics? Are they going to let them come over there back to Japan? How much testing is going to have to be done of these people? Not just people who are going to perhaps participate in the actual games, but people who want to come and represent their fellow countrymen and women. This thing is far, far from over. Far from over. And we've been on top of it since day one. We got a good nose here at the Capital News for a bunch of BS, and I am not going to trust the Chinese Communist Party to tell me that this thing is contained. I'm not going to trust the World Health Organization. I'm not going to trust the CDC with everything they tell me, and I'm not going to trust Trump and his administration. Because one of the things that the president remarked today was that the CDC in the United States has everything under control. The disease is going to be fine. Don't worry about it. And the stock market looks good to him. This guy is sick in the head. It's pathetic. You have a global pandemic. The man doesn't give you any significant detail of virtually anything, but the stock market's okay. This is not what this country is about. The executive branch of this government, the president of the United States, is not supposed to be talking about the stock market like this. At all. At all. Now, I don't know how many people take him seriously when he says this stuff, but that's in and of itself a problem. That you can't take the president serious. It looks okay to him. What does that mean? Does that mean he has everything under control? Does that mean he has the stock market rigged to his liking, to his fancy? Does that mean he has a button to push or a lever to pull? Does that mean he can call up Treasury Secretary Steven Mnuchin, who can then call up the plunge protection team on Wall Street, some of the largest banks on Wall Street, and say, hey, you guys better start buying because we don't like it? Or does he call up Jay Powell and company and say, get those printing presses started, or the combination thereof? Is that draining the swamp? Is that what you voted for? Is that American free market capitalism? Or does that sound a little bit more like some socialism, fascism stuff to you? You better understand those definitions. He's obsessed with this stuff and he's hanging his hat on the stock market, which is beyond stupid. But he has done this since day one. And we have been calling him out on it since this podcast has been online for over a year now. It's just ridiculous. He didn't have to do it. And he could have proven very successful on so many other fronts. But he's taken ownership of something that he's not supposed to have control of. And then, again, there you have to ask yourself, does he have control of it? And are you okay with that? Is that how this system is supposed to work? Is that what you voted for? Is that draining the swamp? Is that free market capitalism? Because the answer is no. It's not. What happens if the stock market looks good to you, right? Does that mean you're supposed to go in and buy tomorrow with both hands? What happens if you lose? Do you get to send a letter to the president and say, hey, you said it looked good. I put some money in and I lost it. Give me my money back. I don't think he's going to pay you back. I don't think he's going to pay you back. It's not how it's supposed to work. Same thing, unfortunately, with his lackey, Larry Kudlow, who came out. Also after the market close. Making comments. Oh, everything's fine. Everything's A-okay. Market's all right. It's just, a little bit oversold. Larry Kudlow, for all intents and purposes, is typically a perma bull. Always up, up, up and away. Always a cheerleader for the stock market, even when reality's staring at him straight in the face like it did a decade ago when the housing market was about to burst. He was telling people to buy stocks and just keep going with it. And then you would have lost 50%. So it's the same characters. It's the same characters. It's the same attitude that we had a decade ago. Meet the new boss, same as the old boss. Can't make this stuff up. Now to some other market news, because here's where the granddaddy of it all takes place, because the market is just that much bigger. We're talking about the U.S. bond market. All right. We have Uncle Sam's 10-year note at 1.4%. It was at 1.39 earlier in the day. 1.39. Wasn't that long ago we were at 1.6. Remember I was saying, oh, uh-oh, sell-off? Is there risk on again? Are we going back into the melt-up mode? 1.6% not too long ago. Right back to 1.39%. And this is a low. And then we have the U.S. 30-year, the long bond. The long bond, the U.S. 30-year. Another record low at 1.86%. What a deal. What a deal. You can give Uncle Sam your money for 30 years, and all you're going to get is 1.86%. What a deal. We have yield curve inversion once again between the 3-month and the 10-year. And of course, we did a Kapital economics presentation on this, and we would have done podcasts discussing this as well, but check that out on the capitalnews.com or our YouTube channel as well. You can find those videos there when we discuss the yield curve and its importance as it relates to the 3-month and the 10-year, and also the 2-year and the 10-year. And there are some others we could get into and discuss as well, but those are where we focus primarily our efforts and discussion on. Check that out and understand this, because there's a lot of people in the market who are saying, well, it's different this time. It's different this time. The yield curve doesn't matter this time that it's inverted. Who cares? Doesn't make a difference. Well, it does. It still matters because it's still sending us signals. It's still sending us information. And as I state here all the time, the economy is a puzzle made up of hundreds and hundreds of pieces. This is one very important piece. It's got a lot of color. It's got a lot of texture. Helps us paint that picture more broadly to understand what it is we're actually looking at. But it is not the end-all be-all. But when you look at the yield curve in conjunction with a whole host of other data that we talk here on a consistent basis, we're starting to see a picture, well, we've been seeing a picture for the past, well, at least me, 2 years, that this thing was going to start winding down. And we really started to see that in full effect in the fourth quarter of 2018. But then Donnie Boy wasn't liking it, and he called up his Secretary of the Treasury, Steven Mnuchin, who then called the plunge protection team, had some conversations with Jay Powell, and here we are. Here we are. We have stock market valuations that which we've never seen, some of them well surpassing where we were in 2000, surpassing where we were in the Great Depression, in 1929, that stock market crash. But worry not, everything is fine. 2 data points that the administration continuously looks at. Unemployment, which is a lagging indicator and doesn't tell you the full picture, because once you look under the hood and you see the quality of those jobs, you say, no, not so much. When you look at the participation rate, you say, yeah, not so much. And then when you understand that it's a lagging indicator, not a forward-looking indicator, well, then it's, not so great now. And the stock market, which over the past 2 days has shed $1 trillion from U.S. market cap. All the gains that have taken place and the melt-up that has continued since the beginning of this year have been wiped out. You take the escalator up, folks. You take the elevator down. That's typically how it is. What's going to happen tomorrow is anybody's guess. Could it be a dead cat bounce? Could it be, actually, it is a moment of buying the dips like we've been conditioned to do for the past 10 years? It could be. It could be. But what this tells us, when you have this type of global, massive sell-off in a single day, how fragile the global economy really is. And that fiscal stimulus, no matter what it's targeted towards, monetary policy and stimulus, no matter what it's targeted for, is not going to cut it. In the recessions of 2000 and 2008, the Federal Reserve had about 500 basis points of ammunition which it used, meaning it cut interest rates by 5% to stave off quote-unquote disaster, to sort of level things out, if you will. Of course, they were pretty much the primary cause of it too, but, they're going to break your legs and then give you the crutch. But the point of the conversation is we don't have that type of room in this one. And we're looking at the granddaddy of all bubbles about to burst. It was one thing in 2000. It was one thing in 2007, 2008. It's a completely different story now. And we did a capital economics presentation on this as well. Are central banks out of ammunition? Are they trapped? And the answer is yes, because they don't have 500 basis points. The Federal Reserve has 1.25% to go. They cut by 500 basis points. We have a federal funds rate of negative 3.5%. Most of the developed world right now, Japan, in Asia, in Europe, many European countries have negative interest rates. Nominal negative interest rates. Here in the United States, we have real negative interest rates. They have real negative interest rates elsewhere, but we are yet to go into that nominal period of negative interest rates here in the United States. We might get there. We might get there, especially if Donald Trump gets his way, because he's been calling for it for quite a while. Which this audience should know how disastrous that would be. Go ask Japan how they're faring. Not so well. Go ask Europe how they're faring. Not so well either. And it won't fare us well in this country either. So Uncle Sam's 10-year is at 1.4%. The 3-month is yielding 1.55%. And the 30-year is at 1.86. An all-time low. Not good, folks. Not good at all. Again, what's going to take place tomorrow is anybody's guess. A few days sell-off is not anything that makes a trend in and of itself, but it's starting to show its face. People are starting to wake up from their high, from their comatose, zombie-like state of buying the dips, and the Federal Reserve and the Bank of Japan and the ECB will take care of everything. The fiscal stimulus is on its way, and everything will be okay. It's not. It's not. The cure is becoming worse than the disease. And it's going to bring everybody down with it. And that is not a good thing. So that's pretty much the market performance. A lot to cover that we did cover. And it's a continuation of what we have been discussing for quite a while here. Now it's just sort of seeing the fruition of it. Seeing it come to fruition. And we have a long way to go because there are a lot of unknowns as it relates to the COVID-19. Have you checked up on the locusts? Remember, we've been talking about locusts here too, the massive swarms that are taking over East Africa, the Horn of Africa, moving inland. Massive swarms. They still exist. Look it up. They're making their way now into the Middle East. They're now in Saudi Arabia. They're now in Kuwait. Some of them are even making their way in large swarms into China. Some of them are already in India, Pakistan. I'm not making this stuff up. Look it up for yourself. Now, China might be able to stop it. Maybe India can stop it. Maybe Saudi Arabia can stop it. But they're not stopping it in those African nations, which are already suffering from local warfare, from local starvation as it is. This is a double whammy. And it's not, you have to understand too, this is not just the crops that these locusts will devour, which they're doing, which can affect the livelihoods of so many people in Africa because that's their primary source of income is from farming. It's also their primary source of their own food. But they also destroy the pastures in which livestock feeds off of. So now it's a double whammy. You have the livestock who are going to suffer because they're not being fed. Farmers who make their living off of selling or butchering those animals can't do it because they're dead or they're not as fat as they used to be. So they're not going to get as much. This is highly problematic. Highly problematic, and it is well under the radar. And that's no surprise. It's because it's in Africa. People ignore Africa. It's in the Middle East. People ignore the Middle East when it comes to this type of stuff unless we're bombing the hell out of them. And who knows what's going to take place in Afghanistan, because there have been some stories out there being reported that there's going to be some sort of massive, or at least some sort of peace deal that's actually going to come to some type of fruition between the United States and the Taliban within Afghanistan. Now, isn't that amazing? 20 years on, almost, and we're about to make some sort of peace deal with the very organization, or one of the organizations in which we were fighting to destroy. The most powerful military in the world has been fighting hundreds of billions of dollars, and we're going to make some sort of deal with the very group which we have been fighting. Haven't toppled them, haven't overthrown them. That was the Taliban, right? It was the Taliban and Al-Qaeda. But it was really the Taliban, because Al-Qaeda was only there because the Taliban let them there. Now we're going to make a deal. And I tell you something else that's a little bit concerning to me too. And this takes us back to Venezuela. And I didn't really speak about this a few weeks ago after the president's State of the Union address, but I should have. But he had Juan Guaido as one of his guests of honor in the gallery. Remember this? Juan Guaido, our puppet, to be El Presidente of Venezuela. Remember him? I see, you thought he was gone. You thought that was done. You thought Maduro, his regime, was just going to take over and everything was going to be okay, we're done. Nope. Juan Guaido was there. And everybody stood up to applaud him because he announced himself, he declared himself the president of Venezuela. And now we have to do everything in our power to prop him up and to get him in there. And I do believe, early reporting on March 10th, we'll see if I remember the date, hopefully you do. On March 10th, there was supposed to be some sort of march, some sort of protest down in Venezuela that he is supposed to lead. We must be on the warpath. So I really hope we don't announce peace in Afghanistan just to start a war in Venezuela, because this has not gone away. It was off the radar for a few months because, remember, it was heavily pushed. We were talking about this almost on a daily basis or semi-daily basis. I was cracking jokes that Marco Rubio, senator from Florida, should become the El Presidente of Venezuela since he's down there so often and talks about it so much. Just make him our puppet. Right? And now it's gone by the wayside until you actually had Juan Guaido in the gallery as a guest of honor to the president. What do you think that means? It means we're probably going to get involved once again in Venezuela to overthrow the Maduro regime. Now, why would we want to do that? Oh, that's right. Those people down there have oil. It's not about peace. It's not about prosperity. It's not about liberty. It's not any of that crap that politicians want to brainwash you with. It's about oil, plain and simple. It's about the fact that the Venezuelans have ties with the Iranians and the Chinese and the Russians, and we don't like them in our backyard, just like they don't like us in our backyard, in their backyard. So things are going to get interesting. Pay attention to what takes place in Venezuela as well. Now, this week, I'm going to wrap up this podcast with a little bit of political news because the South Carolina primaries are set to take place this weekend. There are some town halls. There was one this evening on CNN with the Democratic candidates, a handful of them. And we were going to have another debate tomorrow evening, and then there will be another town hall with a few more candidates on CNN the following night. So tomorrow is going to be a bruiser. Just like it was last week in Nevada, this debate tomorrow evening amongst the remaining Democratic contenders is going to be another bruiser. There's going to be a lot of haymakers thrown. The question is, are they all going to once again focus their sights primarily on Mayor Bloomberg, or are they going to focus more on the frontrunner in Senator Bernie Sanders? That becomes the question. Maybe there'll be some backroom deals and some coordination amongst the campaigns. Maybe they'll split it up. The performance from Mayor Bloomberg last week was suboptimal. It was, in my opinion, it wasn't as bad as a lot of people believe, or that the media wants people to believe that it was. I mean, it was not good. We talked about that. It was not good at all, and he has to step it up. He has to, because if he performs in that way again tomorrow evening, he's going to be in a lot of trouble, and that could give the pathway for Biden to become that middle-of-the-road centrist, to maybe get some steam, especially if he wins the South Carolina primary. Because I think it's a little bit too late for Elizabeth Warren to get anywhere in that middle lane which is occupied by Biden, it's occupied by Bloomberg, it's occupied by Buttigieg, and it's occupied by Klobuchar. And to some extent, it's Tom Steyer, but Tom Steyer really doesn't have a chance. And there's a lot of things that he's on the, they all have their own problems with being too far left on a number of issues, but we know what those are. So Bloomberg has to show up. He has to look competent. He has to sound and act presidential. He has to deflect and divert if he has to. He has to pivot. He has to go on the offensive, and he has to outline his platform. And if he can do that, then he can carry himself through on Super Tuesday, which he would do anyway because he has the money. But that's where a lot of this is going to start to ease out, and people are going to start to falter. So Super Tuesday is only 10 days away. I believe it's the first Tuesday of March. So we're right around the corner on that. And we're going to see a lot of people I would expect to drop out. I would think Steyer will probably drop out. I think Klobuchar will have to drop out by that time. Buttigieg depends on how much momentum he gets, but he does have some delegates at this point, obviously with Iowa and New Hampshire a little bit there. But I just don't think he has it to go all the way. I don't. So he should drop off. Bloomberg has the money, but again, it's going to really depend on how well he performs tomorrow night and how well he does on the CNN town hall on Wednesday as well. But one of the things I want to end on, because I've talked about this a little bit, I've danced around it a little bit in regards to Bernie Sanders. This audience knows that I don't agree with him on virtually anything, but he is consistent. He's not. When you sit down and you watch his actual interviews, and we cited the Joe Rogan podcast before, but when he's not on the debate stage looking for that 2-minute soundbite, he knows how to play the game. He understands that it's all for show pretty much up there. You can actually sit down and have a conversation with him. It doesn't mean you're going to like his ideas or his responses, but it actually sounds like somebody who has put thought into what he is saying. Now, it might not be great thought, but there's some policy initiatives, and there are some basic questions that he asks as a rhetorical question that interests and excites a lot of people. And what I'm getting to is Bernie Sanders can win. He can win not only the Democratic nomination, as contentious as it will be, he can win that, but he can also win the presidency. And I take no pride in saying that, but from what I have been watching more closely, he can win. And I think one of the reasons why he can is because he asks some questions, some rhetorical questions to people that resonate with a lot of this country. Even if you don't agree with him. I don't agree with him. But I can understand and respect where people are coming from when they sort of flock to what he is saying. Because he's saying if the United States of America is wealthy and as rich and as powerful as we are, how can it be that somebody who gets sick can also file for bankruptcy because they have to, because they can't afford their health insurance and they can't afford the medical care? How can that be in this country? How can we as a nation spend the hundreds of billions, trillions of dollars on the military-industrial complex, on war, but how come we cannot spend that same dollars, those same monies, on the people in this country, a country that's supposed to be by, of, and for the people? If we can give major tax breaks and corporate welfare and subsidies and regulatory favor to the likes of Amazon and Google and Facebook and Walmart, etc., if the corporate welfare can take place, then why can't the democratic social welfare take place? And you say, that's actually a reasonable question, isn't it? You could give it to them. You can create all this wealth inequality. You can make sure that the 1% controls 90% of financial assets, but you can't take care of the people? That's a reasonable question, because if you're going to take in $3.5 trillion a year and spend even more than that, then shouldn't it go to the people? Don't you think that could cover health insurance? Don't you think that could cover a whole bunch of other things? Get what I'm saying? That resonates with a lot of people. Now, the solution to corporate welfare is not social welfare. That's the problem. People don't understand this. They think that this somehow is free market capitalism. It is not. We are not even close to resembling free market capitalism. Not for a second. But you know what's going to get blamed when this house of cards comes tumbling down once again, which it will, just a question of when. It'll be blamed on free market capitalism. It isn't. It isn't. It's a bastardization of fascism and socialism. It is that corporate welfare. It is. But there's a ton of social welfare that exists in this country too. But free market capitalism will get the blame. And here's the other thing, and I'm going to wrap this up. Between Bernie Sanders on that debate stage with Donald Trump. Bernie Sanders can talk policy. Donald Trump cannot. Donald Trump gets loud. He sucks up the oxygen in the room. He talks in a couple bullet points. Doesn't string too many sentences together. The wall, the Chinese, it's their fault. It's somebody else's fault. Drain the swamp. It's not going to cut it. It's not going to cut it. And when you go back and you watch the debates between him and Hillary Clinton, it's pretty much the same story. She was prepared. She could talk policy. And I don't like Hillary Clinton. I'm just telling you I'm just giving you my analysis here of what the president is up against. Bernie Sanders goes toe-to-toe with all of these people. He knows what he wants to say. He knows how to pivot. He knows how to talk about his policies. Whether you agree with him is a different question. Donald Trump does not get into those details. It's not his style. It's not what got him to be the president. But it may be what the country is looking for this time. A little bit more concrete evidence as to how policies are going to affect XYZ, how they're going to be implemented, all that stuff. Why they need to be implemented. We got a long way to go. I'm not saying Bernie's going to get it, but I'm saying now that he can. I take no pride in it, but this is where this country is. Manic Monday. Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.